This is a Sunday special, and I'll tell you guys this. Berkshire Hathaway cash has topped $325 billion. And obviously, Warren Buffett has been selling shares. But the question is, why is he selling when everyone else is buying? Or is it because be fearful when others are greedy? This is a very important video. Let's go into the details. But before that, disclaimer apply as usual. Now, first of all, let's talk about the coming election. Okay, it seems that things have changed a little bit. Now, 5 days ago, we have Donald Trump leading Kamala Harris through a poly market forecast by 66.6. That's a cool number, right? But 2 days, ago, the number has dropped to 56%. So it couldn't be a very, very tight race. Okay, I believe that. My take is still the same. I know that everyone is contrary, or I mean, basically everybody is on the same page. I'm contrary. Instead, I'm looking at Harris to win. All right, I got my reason. I showed before in the video, so go to my video to take a look. Now, the question is this: why is this Warren Buffett or Berkshire Hathaway selling? Now, first of all, let's take a look at numbers. It's $325 billion in cash. This is everywhere now to this morning. Since this morning, everywhere is talking about Berkshire Hathaway selling shares, and primary is Apple. And we all know that Warren Buffett bought a lot of Apple in a portfolio, up to 52 to 56% at one stage. And the thing is this, we all know that it's because back then we have a very interest-free or interest-low environment. And the thing is this, right, then technology companies do very well. So now, if things is happening, okay, if interest rate stays high, then it's going to be very detrimental for the technology shares. So that's one reason why I think he's selling Apple. But of course, there's more reason to that. I'll get back to you on this. But let's look at the current unemployment issue right now. Now, last Friday, when we saw the non-farm payroll, I really shocked. Okay. Now, I was looking at 54,000, which is like the normal consensus was 105, 120. And when I did this video, I said 54,000. A lot of people laugh at me and think that this is crazy, this is nonsense. But worse, it came out at 12,000. And the reason was given because of storms and strikes. But honestly, I don't buy that. So if you remember, a month ago, I already said this, okay? Move aside inflation, the next wave will be unemployment. I gave this call 1 month ago, and it's really happening right now. You can see, although the actual is 12,000, okay, but there seems to be some revision. And the revision seems to be happening in August, September, and most probably it may happen in October. And if that really happened, we could go into negative. Now, negative number is definitely bad, and we have said this before. Now, look at this chart. This is a very powerful chart. I think this is. It's from the US 2000 versus 2007 and 2024. Interesting, go by sevens, yeah? Okay, in a way, you can look at this right now on your screen. Okay, let me just annotate this. This is the unemployment. This is non-farm payroll in year 2000, and the Dow Jones was trading at S&P at a high level back then. Okay, you can take a look over here. And of course, what happened? The unemployment data basically came down. And of course, the stock market also came off. Can you see that? So it happened again back then in 2007. And of course, stock market hit a high. Can you see that? And then came off. So right now, it seems that the thing may be repeating because now we may enter to the negative zone. And we've seen it before, the market may be heading down. So that's the reason why I think that traders, you need to be very careful into the month of November and December. But most important, you may ask, why is Warren Buffett selling? So look at this right now. He sold $34.6 billion worth of stocks, okay? And he did a bigger one in Q2 liquidation. Now, the thing is this, he has been selling, and this is not the first quarter. In fact, he has been selling for 8 consecutive quarters. Okay, you can see that the Berkshire Hathaway net purchases of the securities are all down. And look at it. So in Apple holding, he was holding a billion shares, and then now he's holding less than 400 billion. So all this tells you that something is just wrong, right? I mean, this is the guy who's been correct. Every time when Warren Buffett basically takes shares from the market, it seems that the market will peak. And of course, we right now look at the PE ratio, it seems that we are really at a pretty expensive price. It's not the most expensive, but it's definitely one of the expensive level at 29.94. So I believe that, right, that's one of the reasons for that. And of course, if you look at it, if we adjusted S&P with inflation, you can see it's now at a very, very high price. It's like 16 times, which is really the highest since what, 1947 to now? So all this tells you that something is very wrong on the US stock market. But most important, if you look at it, is if we put this now, inflation adjusted S&P relatively to the consumer price index for all urban consumer, you can see this chart. And if things do really happen accordingly, we may see a 60% pullback. Now, it's not the stock market pulling back 60%, but I'm talking about the whole thing, okay? The market basically coming down by at least 10 to 20%. And because of that, right now, there's this ongoing rumor says that the Federal Reserve may not really cut rate after 2024. So now at the moment, we do know on 7 November, Federal Reserve will cut rate. That's for sure, the 25 basis point. That is already pretty clear. But if you look at 18 December, the numbers have changed a little bit. The numbers now is at 82.7%. That will be another quarter point cut, but it's 17.1% of remaining the same. Now, last week itself, it was a one single digit. So I can say, guys, this thing is shifting, and I think that Federal Reserve knows something, and they are holding it back right now. So that's the reason why you can see that the bond market is not reacting the right way. Now, basically, I shared this before to you, when the interest rate goes down, bond prices goes up. This is something that we all know in academic. But now we are seeing the opposite. And last week, we continue to see the bond market trading lower, the TLT, 390.84. And I said it before, I believe that we can really see 81.50 level. Now, that's a lot of money to make if you talk about people like George Soros, Druckenmiller, all these guys, Paul Tudor Jones, Fink, they're all basically taking the other side. And if the bond market really comes down, of course, people did say this. Maybe they'll sell the bonds and buy the stocks. Well, it is possible, but I don't think so, because if you put it into a side by side, right, you do see the stock market reacting at the same time. And if you look at it right now, this is the one reason, because now the US national debt has already hit $32.86 trillion, and it's still going to increase, okay? Still going to increase. And if you look at the pure numbers, well, good guys, a lot of people have been buying into the bond market, thinking it's cheap, right? Which is the most retail investors doing that. But I see they keep on buying, the price keep on going down. It seems that there will be a breaking point somewhere. And of course, right now, if the continuation of this, the US government spending was set to hit $13 trillion a year by 2029. So that's the reason why Paul Tudor Jones, Stanley Druckenmiller, Leon Cooperman, they're all taken to the airwaves to tell and warn about the instability of the current physical path. Okay, this is crazy. This is insane. And if this is going to continue, guys, be careful on the bond market. So to wrap it up itself, right, something you must understand. Be fearful when others are greedy, and be greedy when others are fearful. We last heard this in 2008 and 9 when the Lehman crisis happened. Everyone was talking about this, but no one buys shares. And then after that, people talk about it when it's going up and stuff like that. So if you look at the Warren Buffett indicator right now, we are really at the same high back in 2020 before we have the COVID. And of course, we all know that the current now Berkshire Hathaway has basically have zero buyback. Really, I mean, with the share price so high right now, they are showing by example zero buyback, and there are still companies buying in. So all I can tell you guys, something is just very wrong here. And you can see that when Warren Buffett was buying a lot of shares, it was where by in 2020 when went by the COVID time itself. So it's somewhere around this area here. So the thing is, when it's around somewhere around this area, you can see that he basically don't buy shares. So all these tells you that this guy, he knows his stuff. You should be following somewhere. Don't you think so? All right, to wrap it up here, guys, this is my personal chart since 2004. Okay, so let me explain to you how does it work, all right? So basically, if you see the chart, right, this is where the peak was back in 2016. And you can see that once you break out, it went up, right? Okay, cool. But when it came back down, you look at the way it gets supported exactly at the previous resistance support. Got the idea now? Good. So with this idea, you got it now, it's easier. Now, this is the resistance, okay? This is where they break out. And incredibly, that is where it came back down, got supported, and rebounded. Got the idea? Pretty cool, right? So with this concept right now, take the resistance, It went through it, it went again. So I believe that this will be the buying opportunity. Now, which means that if the Dow Jones to pull back, there is a possibility to see 37,000, okay, 37,000 if let's say the market do pull back dramatically, okay, 37,000, okay. And then that is where I strongly believe that the RSI will come back down to somewhere here. Now, the last few times in 2020, the RSI hit 50, and that was where it consolidated and then it went up, right? Okay, so it happened again in 2020, oh, that's 2010, sorry, my bad. 2020, it happened again. And of course, in 2022, 2023, it happened somewhere like this. So that means that if there is a possibility that the Dow Jones do come to 37,000, the RSI for the monthly chart will likely hit 50%. And I think that will be a good buy. And I believe that after that itself, Warren Buffett will come in with all his $325 billion, and everyone who covers shorts position, they're all coming to buy big time. Okay, I repeat myself, buy big time on the Dow, and this time around the Dow will surge to 45,000 minimally. Okay, so that is how I see it for the long term, which means that the selling must come in, then Warren and friends come in to buy, and then the Dow will go all the way to 45,000 until 2026. Okay, so that is my call in the market. I hope that this will happen and all of us will make good money from the market. All right, that will be all for today. I hope you like the Sunday special. This is Kel signing off. Take care, and kindly do me a little favor. Put your comments in the comment box. I'd love to hear from you. All right, fair and share and with your friends. Okay, this is Kel signing off. Bye-bye.